The content presented in this program is for informational and educational purposes only. You should not construe any information as legal, tax, or financial advice. Any information presented should never be used without first assessing your own personal and financial situation or without consulting a financial, legal, or tax professional.
All right, welcome everybody. Hello everybody online. It is wonderful to be here with you today at the Empower Series. So we're super excited. I know all three of us are super excited to share information about homeownership, especially during this homeownership month, because it's a big deal. And I think a lot of times people think homeownership isn't for me. But we're going to hopefully change the dialogue today. So really excited that you're here. Okay, so my name is Alderete. I am with an organization called Money Management International, or MMI, and I'm going to tell you a little bit more about our organization, what we do, and how you can reach out. So important for our purposes today, we are a HUD intermediary, which means that we do home buyer education and counseling. So when these lovely ladies come up and talk to you about down payment assistance programs, in a lot of cases, when you get down payment assistance, there's required education that goes with that. So we provide that education. You'll get a certificate of completion. There are different organizations that provide this. So you'll always want to check with your lender or your down payment assistance program to make sure that the organization you're working with is accepted. But we do provide that education. So we also do budgeting, credit assistance, you know, getting out of debt, buying a home, keeping a home, getting out of student loan debt, all those different things we can help you with. And so I share that to say, if you're sitting in this room or you're watching online and we're talking about money and getting our credit right and getting ready for home ownership, and you're thinking, how can I connect with somebody and talk to them one-on-one about my own personal situation? We can help you with that. So reach out to us, moneymanagement.org. I'll be sharing more information and resources, but I always like to tell you a little bit more about our organization before we start. Okay, so we're going to jump right in. And for those of you watching online, this will just be a little bit of fun for the next couple of minutes. For those of you in the room, we're going to play Family Feud. One round of Family Feud, but we're going to go. So I don't think I'll make you come to the front of the room because that could be a little bit stressful. But I think I'm going to choose the first person that I see on the aisles to be the family representatives. And so when you I'm seeing this gentleman's face like, why? If I was just 5 minutes earlier. Okay, so, but so, you know, we'll kind of do it like instead of hitting a buzzer or whatever, you know, you just kind of like raise up your hand and whatever hand I see first. All right, so just kind of a fun way to start off the workshop. So let me get our Family Feud up here. I wish I was as entertaining or funny as Steve Harvey, but I'm not. Okay, so here we go. Actually, the top three answers are on the board. The top three answers are on the board. But the question is, reasons people don't buy homes or real estate. So let me see your hand when you're ready. I saw this side first.
You're just not ready.
You're just not ready.
Yeah, financial-wise.
Oh. You actually got it right. But I clicked the wrong thing. So you guys get a freebie. It was actually the number one answer. Okay, so you guys can play. There's one left. Sorry that I already screwed this up. But there's one left, so you guys can play or you can pass. You're going to pass? So if you're going to play, that means the person next to you gets a shot at the third answer. Ooh. So 3 X's and then it automatically comes to this side. So sir, did you want to guess? more guess. Yep.
Ask somebody online if they want to guess in the live chat.
All right, before we take it to the other side for the steal, does somebody online want to guess in the live chat? So these are the top 3 reasons people don't buy homes or real estate.
Let's see let's give them a few minutes. Anyone want to try to give a shot?
You guys are getting some extra time to strategize over here.
So there's a little bit of a delay, that's why. Okay, this is no answers.
No guesses? All right, gorgeous ladies, you get a chance for the steal. But you got to get together, make sure you gives you one chance.
I was going to say a lack of knowledge about the process.
Yeah. All right, so I didn't want to share this ahead of time because I didn't want you guys to be able to look it up. But actually, this is according to a LinkedIn poll. A LinkedIn article is out there, and it's talking about the top 3 reasons that people don't buy real estate, and it's money, time, and knowledge. So we're going to change at least actually 2 of those today, right? So we're going to change knowledge, and we're going to change money. So here we go. All right, so get my presentation back up here. Okay, so I'm going to just take probably the first, 30 minutes or so of this session, and I'm going to talk about the basics of preparing yourself for homeownership. So there's a couple different things. Those of you that are attending, watching online, for the first 20 people that do a budget and credit session with us at MMI, and by the way, this is a free session. It takes about an hour of your time to complete. You can do it over the phone or online. It's wonderful. You can work with somebody one-on-one to go through your income, your expenses, your goals, your obstacles. They will work with you to create a budget and a financial action plan and then send it to you. And then all you have to do is walk the walk. So for the first 20 people that do that, and then reach out to Clifton, send him an email, call him, you will receive access to our online homebuyer education course, the one that I was telling you about that gives you the certificate you need for down payment assistance programs for free. So typically this course is $35, and you can find it online. So what I wanted to do today, before we talk a little bit about down payment assistance, I wanted to kind of share with you in a nutshell the type of information that you'll receive in an 8-hour homebuyer course, whether it's in person or online, and just sort of the type of information that you'll need before you become a homeowner. Because I think a lot of times, we saw that lack of knowledge as one of the biggest obstacles, and I think people think, homeownership just isn't for me. It's a big, huge undertaking, and I can't do it. Like, I don't even know where to start. So we're going to debunk some of those myths today. So there's basically 5 sections, right? So, the first place is getting ready for homeownership, thinking about homeownership. Am I ready? Come on in. Welcome. And then secondly, thinking about getting my finances in order. Third is shopping for your home, finding your home. Where do you want to live? What's going to work for you. Then the next step in the process is buying your home. This is where it gets a little bit more intimidating because it's the financing and the mortgage products and, all the lenders are involved. And then finally, maintaining your home so that you can have long-term success, forever and ever as a homeowner and be able to pass that down through generations. All right, so I am hoping that this next 30 minutes is as interactive as possible. So everybody has their phone, yeah? I have several QR codes throughout the presentation that I'm going to ask you to go to different websites, do different things. And those of you online, you can either scan the QR code on your screen or you'll see a link to the page that we're talking about at the bottom of the screen as well. But the first thing you want to do is ask yourself, am I ready to buy a home? Why do I want to buy a home, right? And so thinking about am I ready, there's a lot of different things. Like, what is my goal here? Is my goal just to build equity? Is my goal to have a place for my family over the long term, be able to pass it down? Do I want to save money? Do I want to stop paying rent that could potentially keep going up and up? Like, what is my goal for homeownership? Because really, even though it is the American dream, homeownership is not right for everybody, and it's not right for everybody at every time. So, the first step is really thinking about, why do you want to achieve this goal? So the first thing I'd like to do is just give you about 3 minutes or so to kind of discuss. Either, talk to the person next to you. If you're there online, you can send some stuff in on the comments in the chat. Talk within a group. But I'd like to give you about 3 or 4 minutes to answer some of the questions that we have, right? So we see the advantages and possible drawbacks of homeownership. But to decide whether or not homeownership is ready for you, you would ask yourself these important questions. So we'll take a few minutes, discuss it, and then we'll talk about it as a group. All right, I hear some great dialogue going on out there about why you want to buy a home or why you don't want to buy a home. So a lot of the things to consider: why is homeownership important to me? How do external factors impact my decision? What did anybody talk about in that area?
For me, it was stability.
Yeah, so stability, right? When we're thinking about external factors, it's job stability, it's stuff like, maybe even aging parents. Will my parent need to come stay with me? Kids, things like that. So what external factors are we considering? Can I afford it? And is my job secure? What benefits will homeownership provide? Because even though homeownership provides a lot of benefits, if we back up and take a look, there are a lot of possible drawbacks too. The biggest one is, when something breaks, there's nobody else to fix it, right? So when you're thinking about preparing to be a homeowner, it's not only finding the home and then moving in, and once you get in, it's like, okay, I need a couch, I need towels, I need silverware, I need all these things. And if something breaks, then I need an emergency maintenance fund to be able to handle it. Who's going to cut the grass? Who's going to sweep the walk? Who's going to change the window of that? All those different things. So, there's a lot to consider. And then finally, we typically say it's a good idea to stay in a home at least 5 years so that you can start to build equity in that home, right? So now that you've sort of thought a little bit about, why is homeownership for you or not at this time, then the next section that we talk about, and no, I'm running through this, but again, these are the sections that you'll get in an 8-hour homebuyer course. So then the next thing is, okay, what does my money look like? How are my finances? Can I afford a home, and how much money am I going to need? So there's a few different things in this area. The first is getting your credit in order. This is a big piece of the puzzle, and we'll take a look at what credit scores are needed for different loans. The next is making a plan to reduce or eliminate debt before you move into that home, before you buy that home. Because the last thing you want to do is be like, the term house poor. So you get this home, everything's wonderful and great, you move in, but you are strapped, to the very end, and you don't have any money to be able to handle things. How much house can I afford, and how much money will I need? Another important thing, so just because you're approved for $300,000 doesn't necessarily mean you need to buy a house for $300,000, right? How much can you afford based on your budget, your goals, your lifestyle? And then finally, establishing a budget for my new home. So it goes a step further than that original budget or spending plan that you had. It's making adjustments to that spending plan to say, okay, now I'm going to make sure that I'm saving on a regular basis for a home maintenance fund. I'm going to make sure I'm adding in there my homeowner association dues if I have them. Planning for taxes and insurance and those types of things as well. So the first thing is your credit. So those of you, has anybody in here looked at their credit score or the credit report in the last 12 months? All right. How about those of you online? Anybody look at their credit report in the last 12 months? For those of you who have, I applaud you. We should be doing this whether we want to be a homeowner or not every 12 months. But one of the first things you can do to get your money ready is see what your credit says about you. Potential lenders are going to be looking at your credit report and score to determine whether or not you're a good risk for homeownership. And so you want to know. So if you visit annualcreditreport.com, you can request a free copy of your credit report. Up here and on the screen, you'll see the 5 factors that make up your credit score. This is a FICO score. But in large, 35 and 30% payment history, whether or not you're making regular payments consistently and on time, and whether or not you're charging up to the full balance or paying it off when it comes due. That comes down to a solid budget, right? So the biggest thing you can do to protect your credit is make sure that you're not living above your means and using credit for things you can't afford to pay off at the end of the month, and making regular, consistent payments on time. So let's take a look at some of the typical credit scores that you might need to purchase a home. So there's several different types of loans out there. Conventional loans, FHA loans, VA loans are typically for military families, and then USDA loans are rural loans. So I got this information from Bankrate, so you can visit the site if you're interested to learn more, but this is the current information that's out there. So typically the minimum credit score for a conventional loan is 620. Typically for an FHA loan, it's 580, and sometimes this can fluctuate depending on how much money you have available down. For VA and USDA loans, although there's no official credit requirement, typically, you want a low to mid 600s for a VA loan and a 640 for a USDA loan. So those of you who have seen your credit report, you're aware of what your credit says about you, you know what your credit score is, you can start to be thinking about, okay, do I have work to do or am I ready in this area? The other thing to mention when we talk about credit scores is just because 620 is the minimum for a conventional loan, does that mean that if you walk in with a 620 credit score, you're going to get the best possible financing? No. And the interest rate that you pay has a lot to do with how much your home is going to cost overall. So the better your credit score, the more opportunities you have and the less money you're going to pay overall in interest. All right, and then there's 4 things that a lender considers, right, when they're deciding whether or not to loan somebody money. Credit, which is basically your credit history, the biggest thing. Capital, how much money you have, what your disposable income is. Capacity, how you've made payments in the past. Are you likely to pay your mortgage payment on time? And then collateral. So in some cases, buying a house or a car might even be easier than getting a credit card because you have something tangible that the bank can take away if you default on those payments. That's your collateral, right? So then there's an important number that lenders potentially use, and this is your debt to income ratio. So everybody grab your phones. And so, I think Clifton had sent some information out ahead of time about things you should come to this workshop thinking about. And so, a lot of the things were around your budget and all those different things. So grab your phones because we're going to do a loose calculation of your debt to income ratio. Conventional and FHA loans are the most widely used loans. So we'll use these guidelines here. So if you were to take your total monthly minimum payments, so monthly minimum payments you pay for everything, and then divide that by your take-home income for 1 month. So that's net after taxes, all those different things are taken out. Multiply by 100, it's going to give you your debt to income ratio. If your debt to income ratio is higher than 43, you got some work to do. Got to pay down some debt so that you're a better risk and you're ready to purchase a home. Was everybody able to do a loose calculation of that? I heard a couple, oh. Okay. So the good thing about sessions like this is if you find yourself doing some of this work and some of these calculations and the result is, ooh, that's good because you're here getting the knowledge to be able to do what you want to do. So when you get ready to buy a home, nobody's like, everybody's like, hey, look at you with your fabulous credit. Let's work this out. Okay. So I want to also do a quick calculation for pre-qualification. So again, this is not, any official pre-qualification, but before you buy a house, a lender is going to give you what's called a pre-approval, pre-qualification. But you can calculate this loosely on your own so that you get an idea of how much home you can afford and what your payments are potentially going to be. So grab your phone, scan the QR code, and then you're going to go to this site. It's actually provided by NerdWallet. And we'll take just 2 or 3 minutes, but it's going to ask you to put some information in. It's going to ask about, estimated income, debt things, I think interest rates. But I do think that the minimum average interest rates are already built in this calculator for you. So go ahead and take a look. We'll take, like I said, about 2 minutes so you can figure out, get a good idea of what you might qualify for as far as a home is concerned. Oh my gosh, I did not look that up. Do you know, Clifton?
I'm going to check Mr. Cooper real quick.
I want to say it's probably somewhere around 6.
So Mr. Cooper says,
So she asked what the interest rate is today, average interest rate.
So I'm logging on to Mr. Cooper now.
Okay. Clifton's checking Mr. Cooper.
Check interest rates today, and it says for a 30-year fixed, 6.375 to 6.644. For a 15-year fix, it's 5.75 or 6.136, which is the APR. That's when you add in all of your fees. And then you have the FHA fixed rate being 7.25, 8.098 is the APR. And again, that's when you add in all of your fees
Okay.
on an annual basis. So those are the rates right now.
All right, so how's it coming? Are things surprising you? Do you potentially qualify for a home that you didn't think you'd qualify for before? Yeah. Yeah. I ran these numbers, with some averages, and I was like, okay. And then I went and looked at like homes for sale in the area and the price range. There was a lot of options. So I think even in a market where, home prices are expensive, interest rates are high, still does not mean that home ownership is not right for you. And by the way, if you purchase a home today at a 6.3% interest rate, when those interest rates go down, you have the opportunity to refinance and drop your interest rate lower. So keep that in mind too. Okay, so then we think about budgeting for home ownership, and just some quick numbers around the types of things that you might want to plan for. And then what we see down here are some spending plan guidelines. So take a screenshot of this. This is some good information, and again, just general, right? Everybody's budget is going to be a little bit different, but in general, the biggest chunk of your spending plan should be for housing, about 38%. We see about 12% for food, 15% for transportation, 10% of your money should go to savings, maybe about 5% each for medical, miscellaneous personal items, recreation or entertainment, and debt. So these are some spending plan guidelines. If you're a little bit off from this, or you're a lot off from this, then maybe you have some work to do. Then we see just some examples of the cost of purchasing a home. You might plan for about 1% of the purchase price in earnest money, and this basically is just money saying that, yes, I'm going to put this down because I'm serious about trying to buy this home. Closing costs, 3 to 6% of the purchase price is probably a little low. I actually looked this up this morning. The average amount, does anybody want to guess what the average down payment is that somebody puts down? It was about 13%, so you're close. Yes. And then, just some good spending plan guidelines. How many of you in here have a budget that you're using today, or like a budget-ish? All right, good. So I see a couple hands up. I see a lot of people relating to the term budget-ish. But that's another thing that you could do to start getting ready for your journey to homeownership, is make that budget so that you know exactly what you're working with. And then you can earmark money. So, I want to save 10% for a home. I can start putting away a couple of $100s each month, make my budget around that so that I know I have that money to set aside, and then I can reach my goal in 2 years or whatever it is. All right, and then the next section takes us through how do you select the right home and who will help you. So this is huge because you're going to have a really important team, like several people that are going to help you on your homeownership journey. You are definitely not going alone. So, you want to ask yourself some questions like, where do I want to live? This can be a big difference in how much you pay for a home, how much you pay for taxes, like what neighborhood you live in, what type of home you buy, things like that. Who's on my home buying team? Who are like the MVPs? Who are the most important people on that home buying team? Not that anyone's more important than anybody else, but there are two people that are going to have more interaction with you throughout the home buying process. And then how do I make sure that I safeguard my purchase? So on your home buying team, you're going to have a mortgage representative. This person knows everything about financing and the specifics of loans, as well as the qualification process. Then you're going to have your real estate agent. This person knows property, neighborhoods, prices, what houses sold for in the area, different things like that. They're going to help you negotiate. This is going to be a big, important person on your team. A home inspector. Listen, home inspections may not be required, but I'm telling you now, home inspections are required. Okay? It's going to cost you a couple of $100s out of pocket. It is going to be the best money you ever spent. This person is going to go in and check out the home and see if, you know, this is a good purchase for you, or you're going to have to keep your checkbook out for the next $10,000, $20,000, okay? This is a big person. And if you're trying to buy a house and somebody is telling you, no, 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 we just got it inspected, you're good, spend the extra money. Get that home inspection. Okay, the next person is the insurance agent. So you want to make sure that you are insuring adequately for any eventuality that might come so that you can keep your home if something happens. An appraiser is going to understand the value of the property. And this is important too, because if you're trying to buy a house for, you know, you're trying to finance more than a house is worth, you may not get approved for that loan. That's not a good risk for the bank. So the appraiser is going to help you determine how much that home is worth. And then the attorney understands everything around the law regarding home purchase. And so this is going to be the person that's making sure that every step in the process is legal. So your MVPs, though, are going to be your mortgage representative and your real estate agent. These are probably the people you're going to work the most closely with throughout this process. So keep this in mind. How could you find these people for your home buyer team? Word of mouth, right? So friends, relatives, people like that, you know, we have some great resources local in the room. You know, talk to people. Who did you use? What worked for you? These are resources that you've got to trust. All right, so some of the safeguards for homeownership. We talked about home inspection. Get a home inspection. I'm telling you it's required. Okay, and then make sure you have adequate insurance coverage. So you want to work closely with these people. The next section walks us through what mortgage products are available and do I qualify for assistance. And so we're going to talk about this in detail in just a moment. But in this section, you're going to go through what is the best mortgage loan for me? What does that mortgage process look like? What kind of down payment assistance is out there in my city, my county, my state, and how can I find it? And then what do I need to be prepared for at closing? So here's a breakdown of some of the typical loan types: conventional, FHA, VA, and USDA. And we talked a little bit about this earlier, but it's just going to give you some basic general information about what types of requirements are needed for these different kinds of loans. Because let's say that you're a veteran and you qualify for a VA loan. That doesn't mean that you don't want to learn what your terms are going to look like if you get a conventional or an FHA loan. You want to compare everything that you qualify for and make sure that you get the best product for you. So shop and compare all the things that you qualify for. Remember, I said your mortgage lender is going to be a critical person on your team so they can help you through this process. So I have another website for you. You can click this QR code. You can visit the link. It's bankrate.com. Bankrate is a fantastic resource for comparing things, you know, looking at different products, making the best decision for you. But this is going to allow you to compare top mortgage lenders. Does everybody have the QR code? Okay, I'll leave it up here. But when you get to that site, this is great. This is updated. It's top mortgage lenders and products for 2023. And if you scroll down the page, you'll be able to see, like, okay, I think I want a VA loan. What kind of products and lenders are out there for me? You can click on it to learn more. So this will be a great resource. And what I'm hoping is that everybody is getting these links and then saving them so that when you go home today, you can kind of go through and look at all this different stuff.
Also, the links are below the video in YouTube for those who are watching online.
I love you. Okay. All right. So the mortgage process. So check this out. Remember I told you that you're going to have these people on your team, and your real estate agent is an important person because they're going to pretty much be there every step of the way. This kind of gives you an idea of what this mortgage process might look like. And below it, I have some timelines attached. So you could potentially be looking at 3 to 4 months before you get into that home. And you're going to be walking with this real estate agent probably 3 out of those 4 months, right? You're going to, when I bought my house, these girls were like family. Like, we drank wine afterward. Like, they're important, right? So first, pre-approval. How much do I qualify for in, you know, an estimate so that I know what I'm looking for? And then finding a home and making an offer. This is the fun part, right? This is shopping, getting in there. Making an offer, not so fun, because they could come back and they could say, no, I want you to do this. No, I want you to pay this. No, but your real estate agent is going to help you negotiate. That might take about 8 weeks. Mortgage application and approval could potentially take about a week once you find the house that's right for you. And then underwriting. And so this might take even up to 4 weeks. And so this is like, okay, you've been approved. Now we got to, cross our T's and dot our I's and get you that mortgage. There are a few things to keep in mind around this process. And when you get here, your mortgage lender and your real estate agent are going to walk you through all of them. But like, don't make any big purchases. Don't make any big deposits that you can't say where that money came from. So, your credit looks good, your budget looks good, you want to buy your home, you're 4 weeks away, you go out and buy furniture. No. Keep everything where it is until you move into that home and you close, okay? And then finally, closing. This is the good stuff. This process could take about a week, but at the end, you go to the closing table. This is exciting. You get your keys, you move in. This is the day, right? But like this whole process could take several months. So I kind of want to give you an idea of what you're looking at. And then we start to think about down payment assistance. I'm going to fly through this because we have experts in the room. But in short, down payment assistance could cover a lot of different things based on the program. And there are several different types of down payment assistance. So there's a QR code here that's going to link you to an article on Bankrate. And this is going to talk to you about different down payment assistance and where you can look for down payment assistance where you live and then nationally. So different types of down payment assistance. You could get a grant, which is basically a one-time payout or cash sum, and you don't have to repay this. You could get a low interest loan, which is kind of like almost like a silent second, and it's assistance that's repaid over several years. Deferred payment loans is no interest until you sell or refinance the home. Forgivable loans, essentially they're erased after a period of time if you meet some qualifications, which is, owning the home and you're not past due on your payments. And then IDAs or match savings accounts, and this is where, money that you put in is matched by an organization to give you even more for your down payment. So different types of down payment assistance and programs. And when you go on this website, I don't want to take this away because, because you guys are on there, but I did want to give you some information. So the median down payment for the first quarter of this year nationally was about $26,000. We said about 13%, okay? You are going to hear that you probably don't need that much money to buy a house in Texas, in Dallas, or in Irving. But I want you to know, right? And then, because you're going to see things like this. And then based on loan type, but check this out. When you go here, you'll see this. VA loans, you may put nothing down. USDA loans, you may put nothing down. FHA loans, minimum down payment might be 3.5%. So it's not this 20% that people are telling you have to have. It might be for PMI, and then conventional loans, you might be looking at a minimum of 3%.
What's PMI?
I can't remember what it stands for. It's like property mortgage insurance, I think. But basically what it means is if you don't put, based on the kind of loan you have, if you don't put at least 20% down and you default, it sounds like it protects you if you don't make a payment, but it doesn't. It protects the bank. That's what it is. And then once you have 20% down, you could actually apply to get that removed or refinance or whatever. Okay, and then we think about closing. So there's a couple of important things. Before you go to the closing table, you want to make sure that you have purchased the required insurance. You work with that insurance agent on your team to make sure that you have what you need at closing. You also want to complete a final walkthrough of the property. You will hear some horror stories, right? You want to make sure that you're with your inspector, you're with your agent, and you do that final walkthrough to make sure that the seller did what the seller promised they were going to do, everything is good. And then you want to review your loan estimate. So this QR code, go ahead and check it out, but this is going to take you to a loan estimate form. So there are two important forms throughout the process. The first is a loan estimate, and this is basically exactly what it sounds like. It's going to give you the numbers that you can expect around your loan. And so when I actually pulled this up, and I want to show it to you guys. So there's a really good resource on the CFBP. This is where I'm going to take you when you go there. But when you come here, this will break down all the different parts of that loan estimate. So it's important for you to check this out before you go to closing and come to the table with any questions that you might have. So it's going to show you like all the different things you can check and what that loan estimate looks like. Once closing is complete, you're going to get another important document, and this is called a closing disclosure. And so basically you can come here, CFBP site as well, and you can see a sample closing disclosure, but this is going to be like the official, right? So this is your interest rate, this is your payment, this is all the stuff that's going to happen. You're going to get this at closing. So these are important things to check out. Yes. Yes.
Is the loan estimate, is that given to you actually after you've applied for the loan, so you have all the different parameters associated with it? Is that when you pre-qualify?
Yes, and it's actually, and you know what, I can't remember, but I think it's I want to say it's 3 days before closing. Do you know for sure? Is it 3 days before closing that it's required? I think it is.
The closing disclosure is.
Yeah, but then the loan estimate.
Your loan estimate will be once you do your pre-qualification, when you get to pre-approval.
Yes.
That's where you'll start to get more concrete numbers.
Okay. So the closing disclosure, the final, the official, is the 3 days. The loan estimate, yes, pre-approval. So you might have a loan estimate from, like if you have two different that you want to compare, you might have a couple, right? But like your loan estimate with the organization that you're going to go with, you want to check that out before closing so that if there's any questions about interest rate, payment, we didn't talk about this, oh, this is an adjustable rate mortgage, like all those things you want to know up front, okay? Thank you. And then finally, how can I ensure long-term success? So this is keeping your home. And so the sections in this area that you would be focusing on are moving in, sort of a move-in checklist, making your first payment. How do I get ready to do that? Am I going to do this, is it going to be automatic? Am I going to mail it old school? Like, how am I going to do this? And then based on the way that you decide you're going to make your payment, give yourself enough time. I think people don't think about stuff like that. And then managing your household every day. So before you move in, just a quick couple of things. You want to contact utility companies. You want to make sure you make moving arrangements. I suggest get people that you love and buy them some pizza. This is a lot cheaper and a whole lot more fun. Update your billing address, forward your mail. After closing, contact your county about a homeowner exemption. So oftentimes this homestead tax exemption can save you some money on taxes, but you have to qualify and apply for it. So know that. Prepare to make your first payment and then create a home maintenance schedule. And when you start to think about a home maintenance schedule, it's a good idea to think about things that you're going to do daily, weekly, monthly, biannually, and annually. So really create that schedule. Like every day I sweep my walk. Every day I don't go check my windows, but probably every 6 months when my seasons change, I make sure that like, how come I see condensation? Make sure there's caulk around my windows. Like if you have a home maintenance checklist to help you do that, things don't get out of control. Perfect example. So my son's bedroom window recently, this would be like our fire escape. I go in there because he's 14. My God, I try to open the window. But the window won't open. I'm like, what? Okay, so $300, and thank goodness my husband was able to fix that. Otherwise, it would have been a whole lot more. But that's just one example. Like, if I didn't have $300 last week, I'd have been like, what do I do? This is a fire escape window. Like, we got to have this window open. So think about stuff like that. Make sure you're checking that. The worst thing that would happen is I didn't check that window and something happened and we couldn't get out. So things like that you want to have on your maintenance checklist. And then the last thing would be making sure that you have adequate resources to protect you and help you long term. So stuff happens, life happens. If you can't make a payment, you want to reach out immediately for assistance so that you don't have foreclosure happen to you. So different resources that are available. These are the ones that we provide for closure counseling. We can work with your lender to help you, through that process. What are my options to keep my home? Reverse mortgage counseling if you think that might be right for you. Like I said, housing education, counseling education, and then HUD.gov is going to be a fantastic resource, not only for down payment assistance programs and things like that, but also all kinds of stuff around home ownership. Checklists, resources, links, all kinds of stuff, HUD.gov. Oh my goodness, Empower Series family. We did an 8-hour course in 40 minutes. All right. So it's time for these gorgeous ladies that are going to talk to you about homeownership programs in the areas where you live to come up. But before we did that, I just, like I said, wanted to make sure that you had a little bit of just some knowledge around that process, the quick and dirty of the home buying process and what it looks like. So what questions do you have about that before they come up? Anybody out there? Anybody in here?
You know, I do have a question. Do they account for, so if you receive a bonus, an annual bonus, do you have to include that in terms of your income? Can you choose to exclude that?
So they're going to look at your, that's a good question. So I'm sorry. So the question was, if you get a bonus, like an annual bonus, do you have to include that in terms of your income? I'm going to say I think the answer is yes. Tell me if I'm lying, but you're going to have to provide like your paycheck stubs, your W-2s. So even if it's not on your paycheck stub, it's going to be on your W-2s and stuff like that. So I do think you have to report that. Yeah, yeah, yeah. If it's cash,
I think the point was that I was trying to look at just focusing on not using that bonus and just focusing on just base salary.
yes.
And then accounting for the house would be based on the base salary, not necessarily on any bonus.
Yeah, if it's considered taxable income, I think they're going to look at it. Yeah, yep. Good question. Yeah, I know, I know, I know. Isn't there a way we could do this?
Well, I think you can, when you're completing your application, you can, like if you have more income than you want to use in your application, that's your choice, right? I think, because you have to document it. So if you have 3 jobs and you only want to put 2 jobs on your application, that's your choice. But if you have 3 jobs and you want to, so you have 4 jobs, that's not what you should do.
Yeah, but whatever, right, but whatever, yes, but whatever job you say, they're going to check. Yeah. Okay, any other questions?
Those last few slides that you used, were the links on here as well? With the closure disclosure and the
Yes,
loan,
yes. I don't know that the closing disclosure was, but I will email that to you. Yeah.
And if you registered, you should have received an email with a link to all of the slide presentations.
and I'm looking at it now. That's why I was trying to make sure I was following along.
Yeah.
Right. If you're online, the links to all of the slide presentations are under the video.
All right. All right. So everybody has a good idea of the process, about how much they're looking at. You guys are feeling ready. I'm excited. This time next year, maybe half the room is going to be homeowners. Okay. So who's coming up first? I'll pull your presentation up.
I do have a quick question for you. What about debt to ratio when it comes to student loans? Because right now, my stuff is in forbearance because
Yeah.
I'm part of that lawsuit.
Yeah.
So my debt to ratio probably looks ridiculous because of that, but it hasn't been late. Payments haven't been late or anything, but it's
Right.
just right now, it's in forbearance until like 2026. So will they exclude that out or how will that work?
That's a good question, and I'm not, so what she was asking about is student loan debt. So I do think student loan debt typically is considered, but if you're, and I'm not familiar with the lawsuit that you're talking
Pretty
about.
much the school that I went to, even though my degrees are good, they use accepted practices. So my school was on that list. So I've already got a letter stating that I'm in that. I made it in. So
Okay.
pretty much if it's not discharged and removed from my credit by 2026, it will be done.
So I'll check on it. I'm not sure of the answer. My guess would be if it's in forbearance, maybe not, but I don't know.
It's showing in forbearance, so I'm just wondering if it's in forbearance, will that go towards my debt?
My guess would be no, because you're not actively paying on it. But let me check and I'll email you for sure.
And then I would say when you apply for your mortgage, it goes through an underwriting process. So specifically, it's the conversation with your mortgage underwriting department that would determine how is that going to impact their decision to cover you in their rate.
Clifton makes a really good point. So it's really funny when you're buying a house, it's so different than like a credit card or something like that. Like your lender will say to you, "Oh, what's this? Okay, could you get a letter explaining this?" And we'll just put that in your file and it's fine. So there's a lot of like gray area, so to speak, kind of with stuff like that. So that's a really good point. Know about that kind of stuff as well. Okay, anything else? All right.
I just wanted to add to that though too, the student loans, I know, at least for mine, that's still on hold or whatever is happening with Biden. My understanding is that if I were to apply for something because I'm not actively paying and it shows that it's in a
Forbearance.
at least until whenever they decide to let that go, release it, it should not be.
Yeah, I don't think it is, but I'll double check and make sure. I want to make sure I'm telling you guys the truth.
So I am Tammi Southall. I work for the City of Dallas Housing and Neighborhood Revitalization. I am a housing program manager, and I manage the administration and operations for the Dallas Homebuyer Assistance Program, or out in the community we're known as DHAP. So I'm going to share information here. Okay, just a little bit of background history about our program. This program actually has been in existence since 1991. We've actually closed about 8,000, or assisted 8,000 families with homebuyer assistance, and it is for home purchases within the city limits of Dallas. So we'll talk about its purpose, what the requirements are to apply, property requirements, what our funding determination process looks like, and how to apply for the assistance. So again, we've been in existence over 30 years. Purpose here, we want to increase availability for affordable housing opportunities in the city of Dallas and help support neighborhoods and community-based preservation and revitalization efforts. The assistance here that we provide helps homeowners we assist low to moderate income families with down payment, closing costs, and principal reductions, and it is strictly for home purchases within the city limits of Dallas. So if you're looking outside of Dallas, like Cedar Hill, Lancaster, Garland, we do not assist there. It's strictly for home purchases within the city limits of Dallas. The applicants must be a U.S. citizen, permanent resident, or any eligible immigration status with a valid Social Security card. We assist households with incomes up to 120% of the area median income for Dallas. And home buyers that are employed, you have to have at least 6 months of continuous employment with your employer. If you are self-employed, we do require at least 2 years of self-employment with 2 years of tax returns. And then once we make income determination, it is valid for a 6-month period. When we're looking at income, we're looking at the household income. So if you have a spouse, both spouses are working, we're looking at both incomes. We're also looking at if there is child support coming into the home. If there's, state of Texas doesn't have alimony, but any income that is coming into the household, we are looking at the household income, regardless of who's on the loan or not. The program, we have 3 extensions of the program, and we'll talk about that in a little bit, but they are all based on household income. You must live in the property as your primary residence. You cannot purchase the home as an investment property. You have to live in it as your primary residence. And then we do require that you be able to qualify for a 30-year amortizing loan with a fixed rate mortgage. And it has to be from one of our approved mortgage lenders, and we have a list of available lenders on our website. We don't have any type of credit score requirements, but you must be able to qualify for a loan that is not a high cost or subprime loan, adjustable rate mortgages we do not work with, or interest only type loans. And then the lenders, they must establish an escrow account for your taxes and insurance. We do require you to take an 8-hour homebuyer education course from a HUD certified counseling agency that must be provided within a 12-month period of before receiving assistance from the City of Dallas. We do have a list available on our website of counseling agencies who offer the courses, and they will provide you a certificate of completion once you've completed that course. We do require you to invest a minimum of $1,000 toward the purchase of the home. So monies you put down for earnest money, if you pay for an appraisal out of pocket, those we will count toward meeting that $1,000 minimum requirement. Doesn't mean that that's all you have to come to closing with, but you must be able to invest a minimum of $1,000. And then we do require you to have 2 months reserves after closing. So reserves being, once you have mortgage approval, whatever your monthly mortgage is going to be, we need to see that you have at least 2 months of that available in a checking or savings account. That's your emergency money that she mentioned earlier. We want to see that you have at least 2 months in. So in case something comes up, you do have that money available. Ineligible participants would be members of Dallas City Council, employees of the housing department, any employee, official, or agent of the city of Dallas, and that even includes family members, are not eligible for this program. And that even extends for a 12-month period beyond separation from the city. Okay, so earlier I mentioned we have 3 different extensions of the home buyer assistance program. The first program that we have, we consider it as our traditional DHAP program. This program is federally funded. We receive funds from HUD for funding this particular program. The income requirement on it is 80% or below the area median income. The funding that we have available, if you purchase or if the purchased property is located in a high opportunity area, those are areas within the city of Dallas where the poverty rates are at or below 20%. You have access of up to $60,000 in assistance. Anywhere else within the city is up to $50,000 in assistance. This is a new change that the city council approved back in February. So it's now up to $50,000 in assistance. Because of the federal funds that we use, HUD does place a sales price limit. So right now, the current sales price limit for Dallas is $271,000. So you're like, where can I find a house for $271,000? Right, especially in Dallas. So we are actually, the city does work with a number of nonprofit or for-profit developers who are building affordable housing to meet that 271 goal. A lot of them are less, even actually. But right now, the sales price limit is $271,000. This usually changes on an annual basis. Usually by now we would have an update. We haven't received an update yet, but just keep checking with us. But for right now, the limit is $271,000. Our assistance is considered a deferred forgivable loan. There's no monthly payment on it. There's no interest on it. The forgiveness is based on what we call the affordability period or the residency terms of the loan, and we'll talk about that in a little bit. Okay. Partial payment is due upon sale, lease, or any disposition of the property prior to meeting that affordability period. So if you live in it, so let's say you have to live in it for 5 years, after year 3 you decide you want to sell it, whatever balance is prorated on an annual basis, whatever balance is left on that loan, you have to pay the city back. Our second program that we have available is a targeted occupations program. This is available for those who are in educational instruction, librarian services, healthcare support and technical positions, and protected services to include firefighters, police officers, security officers. These occupations, typically the incomes are a little bit higher. So your annual household income has to be above 80% of the area median income, but not more than 120% of the area median income for Dallas. I have an income chart that's coming up, so I'll go over that with you. The maximum amount of assistance is available up to $50,000. Because this program is not federally funded, there is no sales price limit. So that limit is going to be determined by when you're working with your mortgage lender based on your income and your credit, what they feel that you can qualify for. The only caveat is that your housing payment cannot exceed 35% of your monthly gross income. Okay. It has a 5-year affordability period. So you live in the house for 5 years. After that 5th year is totally forgiven. But if you happen to not meet the affordability period, the balance of the loan is due. Our third program, this is a new program. What we're finding, because the city of Dallas is growing and there are some areas that are going through gentrification, a lot of Dallas residents are moving outside of the city for affordable options. So we want to try to find a way to keep these people, or keep the residents in the city of Dallas. So City Council approved back in February an anti-displacement homebuyer assistance program. So this program, it is for current residents of the city of Dallas. You have to currently live within the city limits and have lived within the city for a period of at least 10 years. Doesn't have to be consecutive, it can be collective, but as long as you've lived within the city for at least 10 years and a current resident of the city of Dallas. The income qualifications for it must be at least 50% of the area median income, but not more than 120% of the area median income. And the maximum assistance amount is up to $50,000. Because this is not federally funded, there is no sales price limit with it as well. So as long as your mortgage lender determines your affordable sales price and your housing payment cannot exceed 35% of your monthly gross income. And it also has a 5-year affordability period. Again, living in the house at least 5 years, it is totally forgiven. So this is our income chart. The income's just recently changed, June 15th. So we have here on the far left is your household size. Let's say we're going to fund you through our federal program. The most is limited at 80% of the area median income. So your household size of 2, your combined income cannot exceed $66,000 annually. Let's say if with the targeted occupations program, if you're a teacher, you want to apply, your income household size of 2, you've got to be at least $66,000, but not more than $101,376. With the anti-displacement program, minimum income is at least 50%, so household size of 3. Household income, you've got to make at least $46,400, but not more than $114,048. And again, this is just a recent change. Property requirements, again, the purchased property must be located within the city limits of Dallas. On our website, we have a GIS map available if you're trying to determine if a home is in the city of Dallas. There are some areas near the Grand Prairie area. It may have a Grand Prairie address, but what you do is you look at the Dallas County Appraisal District's website, check to see where those the city taxes are paid. If city taxes are paid to the city of Dallas, then that property is an eligible property. There are some areas north Dallas that sit near either Denton County or Collin County. And there actually may be in Collin or Denton County. What you want to do is check their appraisal districts to see where the city taxes are paid. So if the city taxes are paid to the city of Dallas, then the property is eligible. Properties must appraise for at least 100% of the sales price. So you cannot pay more than what the property is actually worth. It can be a single family type home, condominium, or a townhome, or a 1 to 4 duplex unit. Those units are eligible properties. If you're looking at purchasing an existing property, the property can be occupied by either the seller or it can be occupied by the borrower, the person who wants to purchase that property. But if it's occupied by a tenant, that tenant must be, or the property must be vacated for a period of 60 days prior to the execution of the sales contract. Every property that goes through our program has to meet minimum housing standards. That includes lead-based paint poisoning. So we will send out an inspector to inspect the property. We recommend that being done during the option period of your sales contract. But this inspection is for the benefit of this program only. We do a visual assessment to make sure that the property is safe and decent for you to move into. We strongly recommend that you hire your own inspector. It's not required, but it is strongly recommended that you hire your own inspector. Okay. And then if our inspectors find anything that needs to be repaired, that seller must complete those repairs prior to closing. HUD real estate owned properties built after January 1st of 1978 are eligible for this program, but the caveat with this program process is with HUD properties, they do not allow for repairs to be made prior to closing. And with our program, if there are repairs needed, they have to be done before closing. So The catch is, if you're going to contract a HUD property, it's got to be in 100% pristine condition, where there's no repairs needed. Right. And then we do not, the FHA 203K loans, which are repair loans that a lot of times people will get, they'll close and then they'll get a loan to make those repairs. We do not accept those with our program. Okay, our funding, this is the fun part. So our assistance is based on need, but there are maximum amounts. So let's say, we make those determinations based on the sales price, the approved mortgage loan amount, and the closing costs. So we ask the mortgage lenders to provide us a preliminary closing disclosure that will give us an estimate of all the closing costs. That includes the lender fees, they have their charge processing fees. The title company has fees. We need to see that. We need to see what they're holding in escrow for you, prepaids, and any applicable credits that you get. Sometimes sellers will give you a credit for closing. So we need to take a look at all of that. From that, we do a calculation to determine the exact need for you to close on the property. You may not need the full $50,000. Maybe you only need $25,000. So once we've done our calculation, we're going to determine how much you're going to need for closing. So the lenders are aware of this. We have debt to income ratios. Now, there are two ratios that we do look at. The first one is a housing expense ratio, or also known as the front end ratio. This is a comparison of what your monthly mortgage is of your monthly gross income. So for the housing expense ratio, or your mortgage, cannot be more than 35% of your monthly gross income. Then we have the total debt to income ratio, also known as the back end ratio. This is your monthly mortgage payment plus any other monthly obligations that you have. Those combined cannot be more than 45% of your monthly gross income.
So, question about housing expenses. Does that include, you say mortgage, is that just principal and interest?
No, it's principal, interest, taxes, insurance, and if there's HOA. Okay, so funding determination and requirements. So once we've made the determination of the assistance that we're going to provide you, there are written home buyer agreements that have to be signed by the buyer, and basically it's an agreement between the buyer and the city of Dallas. We're going to tell you how much assistance that we're going to provide you, what your affordability period is, and other requirements for you to receive the assistance. These loans are secured as a second lien on the property. It's a soft second lien, but there's a lien placed on the property. And then funding will be provided at the title companies on the day of closing. Our funding sources, I mentioned we use federal funds. So the sources of federal funds we use are the Home Investment Partnership Program and the Community Development Block Grant Program. And then for the targeted occupations and the anti-displacement program, we use general funds for funding. Subsidies are subject to fund availability on a first-come, first-served basis. Acceptance of an application for DHAP in no way constitutes a commitment or obligation on the part of the City of Dallas. No commitments are made or implied until the City of Dallas has approved funding for each application. And funding limitations, due to funding limitations, no applicant should assume any commitment, or even if an applicant must expend personal funds to meet application requirements. So we actually have plenty of funds right now. So we're not at risk of running out of any funds. However, because of the federal funds that we do use, there have been a time where HUD has come in and said, stop funding. So unfortunately, people have gotten to the point where they're ready to close. We couldn't fund. So just be aware of that. But it's only happened once.
So that means don't procrastinate.
Right, exactly. So how to apply with our program. Pre-qualification for our program is required. You just visit our website. We have an online platform for our application. So you visit our website. There is a section on there that says how to apply, and the steps are outlined. First step is take the homebuyer course. And I recommend, especially if you are a first-time homebuyer, take the course first because you're about to make a major investment and you want to know the ins and outs, what to expect walking into this process. So take the course first. And then second step is to get mortgage pre-qualification. And then you'll find a link to our system. It's called Neighborly, where you go in and submit an application with us. And then you can give us a call at this local number here for questions.
Good morning again, almost afternoon, but good morning again. I would like to say some of the things that you guys are going to hear, you probably heard already. So I'm going to spend a little bit less time with kind of going through how we get to some of our determinations because they're pretty similar. What I'd really like to spend time on is showing you how, when Tara talked about your home ownership team, this will be my sales pitch in putting a city, county, state, first-time homeownership program as an MVP on your team. We are definitely in the same realm of making sure that this process works well for you, making sure that you get what you need out of the process, and be an advocate for making sure that everyone on your team is speaking the same language. And if not, we'll kind of help you double check that. So I am Ashley Miller. I work for the City of Irving. I am the Community Development Program Supervisor. Under my wheelhouse are all of the HUD-funded programs. So as some of the presentations you've heard today, you'll see a lot of connections. We talk about your long-term success, not just getting into your home. With the City of Irving, we have home ownership programs, we have home repair programs, we also have rental assistance programs. So we try and talk from when you're renting, if you're needing help preparing for the next step for home ownership, when you've got that mindset where you're ready to get into home ownership, how to transfer to that, and even after you're in the home, if something comes up because you can't call landlords to come take care of things, we're here to help with that as well. So we do our best to offer a holistic process, and a lot of the other states and city and county programs do as well. But similar to what we talked about earlier, if you don't get engaged to be able to get that knowledge, one of our top threes, you don't know that these things are available, you wouldn't know that you have those options. So that's what we want to do here. That's what we do for City of Irving. So what we'll talk about today is our down payment assistance program. Go through a little bit of an overview, talk about some of the eligibility requirements. Like I said, some of these things you'll have heard already before, so you'll be able to see the similarities in a lot of the programs. So even though you're coming and hearing just from us three folks today, you'll be able to use these tools to have conversations with other agencies, so you feel a little bit more aware and at ease as you're starting that process, no matter where you end up purchasing. We'll talk about our specific application process and what you can do to get started if you're interested in purchasing a home in the City of Irving. So the Housing and Redevelopment Division, we offer a variety of programs. Every program that we have, our goal is to make sure that we assist Irving residents and strengthen our communities. We're always looking for ways to increase homeownership within the neighborhoods within the City of Irving, making sure that those who are low or moderate income households have the same opportunities as anyone else to engage in the homeownership process. We utilize our community partners as well. Earlier, there was a conversation about having the nonprofit partners and builders that help keep homes affordable. They are a partner for us as well to help stabilize the market on behalf of everyone. And similar to how we're here today to provide these connections with us as community partners, we do our best to work with those federally and non-federally to make sure that if for some reason in a market like now, where we may need a little bit of extra layers to help get you to that finish line of homeownership, we're helping to create those partnerships on your behalf so you don't have to go through all of those steps. So the City of Irving has been receiving HUD funds since 1999. We've been providing down payment assistance and home repair programs since then. Similar to City of Dallas, our funds are HUD funded. So you'll see a lot of the similar purchase price, income limits. That is one of the benefits of looking through first-time homebuyer programs, because a lot of them have kind of a template that we're required to go by. So you're almost halfway there with knowing what to expect when you start engaging in that conversation. Our funds are for down payment and closing cost assistance for those who are eligible. So when you're working with the City of Irving with our down payment assistance program, you can receive up to $50,000 for new homes or pre-existing. With us, we do the closing costs and the down payment assistance. Earlier, you heard Tammy talk about the deferred and forgivable, and Tara also talked about the different types of grants that we have. The City of Irving follows a similar template to where you are going to receive a second lien on the property. If you're staying in that home as your primary residence, you're staying on top of your mortgage and your insurance and all of the monthly, we call it lien monitoring, annual lien monitoring. That'll check a year off of being deferred. Similar to how we talked about earlier, if you choose to sell the home, you get to prorate that. So if you're contacting City of Irving as required every year to make sure you say, yep, I'm in here, yep, I still love it, mortgage is good, then you get that year. So let's say we've got a 20-year. You sell at 10 years, that first 10 years is good and forgiven. Whatever amount you had, if it was $50,000, when you get prepared to sell your property, the only thing that you're going to be required to get back is $25,000. And another thing to think about with that is it's not $25,000 out of your pocket, it's $25,000 through the transaction of you selling that property. So that's something to think about as well. And we look at the $50,000. Earlier we talked about 13% is what you put down. Oh my gosh, that's so much money. So with our let's say $250,000 as an example. 13% is about $26,000. We've already doubled that for you with our programs. So that's one of those things, as you're making your plan for home ownership, you can almost check that off the box of a thing to worry about and start preparing for your emergency fund. You're having those 2 months, whatever you need to after the property. Another thing that the City of Irving does, we train lenders. We have a list of preferred lenders who we do one-on-one training with to make sure, one, they understand our programs, they understand the products that they can give to our participants to make sure that they are not falling into, does anybody remember 2008, 2009? I remember 2008, 2009, because I bought a house in 2008, and everything went crazy. But because of that, some good things came out of it. Now we understand the importance of making sure that if this person is going to be a part of your team, that they're genuinely a VIP, an MVP on your team. We make sure that if we're going to get anybody referred, they've gone through the process, they understand what to expect, and when I slide them a piece of paper back and say no, they're like, okay, I wasn't trained that way, you're right, let me go back to the drawing board. They're not going to be in the office convincing you that you can afford more than you can. They're not going to be in the office saying, well, maybe they'll take 36 as a front end instead of 35. Let's try. They know that our heart is in the best interest of the client, and they've got to share that with us. So some of these things you've already seen and heard. Thank you, Tammy, for putting the chart that just came out yesterday. My presentation was not done yesterday, so I'm a step behind. But one thing that you can notice, where it's 77 now for the household of 4, it was 82.5. So one of the things that HUD tries to consider is what's actually going on and what is really a reasonable income to consider low income. Every year, I would say for the past 5 years, us as HUD-funded programs are like, wow, that went up a lot. Thank you, because costs of things are going up a lot. So income, while the numbers may look high, is not exactly the same feel. So we are glad that HUD is finally taking that into consideration with us. So it's accounting for some of the changes that are going on in the market. We already talked about your affordability as well. The 35% on the front end is what the requirements are for the City of Irving. 45% on the back end. So for us, we always look for the 2 things, your income eligibility and your mortgage affordability. If those 2 are not ready, then we're going to ask that you maybe go back and talk through budgeting, increasing your income, those type of things, so we can make sure when you get into that property, you're prepared. For our eligibility requirements, you do have to be you and your co-applicant must be permanent legal resident, U.S. citizen. The other thing to think about as well, we talked about earlier your entire household. When you are working with a HUD funded program, we are looking at gross income before anything comes out. We do know that there is a big difference between gross and between net. But while you're preparing for talking to your first-time homebuyer professionals, that way you can kind of have that in mind. So when they say, no, you actually make this much, and you look at your checking account, you're like, somebody's not counting correctly. But it's because we use gross. HUD takes that as the metric by which everybody can be measured. So it takes into account the fairness and equitability of that. You can't have owned a home in the last 3 years. That's including manufactured homes. We don't count timeshares. I don't have a timeshare. It'd be nice to have that as an option to say, don't count that timeshare because you can't. But we do not consider timeshares. You must be pre-approved for a mortgage loan through a preferred lender. So you've heard through everybody, one of your first steps is that pre-approval because that gives you an idea of what you can do. We take it a little bit step further is a pre-approval through our preferred lenders because what they'll do is they'll talk to you about our program. They'll talk to you about what to expect through the process. When we talked earlier and we saw how long it takes to get through that process, they'll let you know where they fit in that process, where we fit in that process, so you can be aware as you go through every step of what's going on in real time. Our preferred lenders walk with you probably more than other lenders will. The lenders will walk through the financial piece and they're like, all right, you're good. Go for it. I'll see you at underwriting. Our lenders will kind of check in with you to, like we talked about earlier, you didn't buy any furniture yet, did you? Okay, good. We're good. They'll check in with you to make sure that if there's a hiccup, we can talk about it before you get to closing. If there's not a hiccup, then they can let you know everything's going good. The city might ask you for this or that, so they can make sure that you are not hit with anything unexpected. We as well request that you have a minimum investment, and I will probably second, third, and fourth. A private inspection would be a good option to get that minimum investment. Not required, but highly recommended. You would be amazed at how emotional a home buyer process can be. And the last thing that you would like is for you to be 30 days from closing saying, I didn't need that inspection. And don't do that final walkthrough, get your keys, and it's not what you expected. So definitely we say take the home inspection. We also do an inspection ourselves, and our inspector also does our home repair program. So he's able to see the minimum quality standards as well as look at it from a renovation or a home rehab perspective. So if it meets the minimum, he'll let you know. But if there's some things you might want to think about later on, he'll let you know that too. We do ask that you do not enter into a contract before applying. You would be amazed how many folks are earnest money down, ready, counting that $50,000, but not approved. I'm gonna grab some water if you don't mind, excuse me. That is something that has happened before, and when I speak of emotional, now that's an emotional moment. Being that far into the process, counting certain funds and they not be available to you, so we highly encourage that you do your home buyer education. Excuse me, y'all, sorry about that. You do your home buyer education. You consult with your mortgage professional. Then you start to apply for the program. Then you start your home search. It's very important to do it in that particular order to make sure that it's smooth. Okay. Also, The home you purchase must be your primary resident. We do allow for you to buy single family townhomes. We're not in the condo business just yet. And it can be new or existing. Again, we do request that as you're going through the process and selecting your home, you keep us in the loop so we can make sure it's gonna be an eligible property. So a little bit of details about the Irving's process. Irving, we have an orientation video. The orientation video walks you through the entire application process. I apologize, you guys. It walks you through the documents that you need, what documents are acceptable. We are the government, so there is a lot of paperwork. We apologize in advance, but we promise it's only one big chunk at the beginning, one big chunk at the end. Once you get your approval letter, it's smooth sailing. But this video is in place so that you can kind of keep it in your favorites, in your likes, so you can go back and forth and double check and make sure you've got everything you need before you submit that application. We ask that you get your pre-approval prior to your application so that we can make sure that you're linked up with the person that's best fit for you. There are a lot of lenders to choose from, but lenders are kind of like car dealers. If you don't like this lot, that didn't feel good, not sure if they're the one for you, by all means, pick the one that you feel like is going to be the best advocate for you through your process. Making sure that you've got the right lender will make sure that they have the right relationship with us and make sure that your process goes smoothly as well. Because like we mentioned, it's a lot of months. I don't know about anybody that's dated somebody before, probably everybody. But if it's not the right one, that 3-6 months feels very long. So we encourage you to make sure you get the person that you feel like has your best interest in mind and will help you through this process as best as possible. We ask that you submit all required documents. We now are moving to an online application here soon, so it'll be a little bit easier for you to kind of upload your documents and make sure you've got what you need instead of the physical paper where you hope that it all is there. We'll be able to engage with you a little bit easier here soon. Once we receive your application, we'll go through our eligibility review where we're looking at your income eligibility, we're looking at your affordability, we're looking to make sure we are prepared to have any conversations with you about what you may need to work on. If you're ready, and if you're not, we can help refer you to an agency that will help you get ready. Then we'll bring you in for a one-on-one. Again, I say, Irving, we are doing our sales pitch to be one of your MVPs because one thing that we don't want to do is take your paper, send your letter, and say good luck. We want to come in and talk to you. We want to talk to you about what to expect with your lenders, what to expect with us, what to expect after you've purchased with us. We've had times where people will purchase with us and forget that they've got to check in with us once a year, and that's going to affect how much you can get released from your lien. If you're in the home but you're not doing the check-ins, then you may not get credit for that year. So we talk to you during that interview to help you be prepared. So as you're doing your move-in checklist and you're doing your annual what you need to do for repairs, you put that on your list. Check back in with city. Have that as one of your regular things so you can make sure when you're ready to move on or when you're ready to say, hey, I've been here 20 years, get that off my property, then you're good and we can keep it moving. So we like to give you kind of the from tip to tail at the beginning so that you're prepared and aware for everything. Your homebuyer class, we do encourage you to do it before you start the process. It's not required. You at least have to have it before we get you to your one-on-one interview so we can make sure that you've had the education that you need. If you've taken one in the last 12 months, that is still a valid certificate for us. We'll provide you with our commitment letter. The commitment letter provides you, again, with next steps. It will provide a list of things, a checklist for your lender. It'll even provide the closing checklist, so whoever your lender's title company is that you're working with. They'll be aware of the paperwork that they'll need to do that's specific to us as soon as you start your process. Then you begin your home search. Once you begin your home search, things kind of move to the mortgage side. So you'll get to kind of relax a bit with your interactions with us, and then you'll spend more time with your lender and your realtor. But there's whole lots of stuff behind the scenes. It's similar to a restaurant. You're in the front and you're eating, you're hanging out, but in the back, plates are flying, sauce is flying. But by the time you get to closing, everybody's like, here's your paperwork. You did great. That's our job. We'll be the crazy behind the scenes. We're totally okay with that. But to see the smile with the keys, to get the pictures to say my first home, we'll go through all the crazy for you guys. So once you begin your home search, you find your home search, get prepared for the financial pieces, and get prepared for closing. Now, where do you start when you're wanting to work with the City of Irving? This is our website. Housing and Redevelopment website. This Home Buyer Assistance Program webpage will give you lots of information. This video here is where you'll start with the orientation, where you get to see the behind the scenes of everything that you'll need. You'll get to see how we evaluate things. You'll get to see what documents are acceptable. You'll get to do everything you need to do to prepare for your application. I encourage you to scroll through the whole page because there's a lot of information, but the orientation will at least be your first step. The down payment assistance orientation video is the link there. It's a hyperlink. Once you click on down payment assistance, you'll get to that video, it'll pop up. Once you get done with the video, you'll click and confirm that you did your orientation and you're ready to start submitting your application. Then taking a look at our lender list. We pre-approve our lenders and put them on our website. Twice a year, we do a lender orientation. Anybody that's on our lender, we've had some folks that have been on for several years. They have to recertify every year because we make sure that as we're making changes, they're aware, they're prepared, that they're not gonna go through the process of doing the paperwork with you guys off of old rules, and it changes you. If anything, one thing about the title and underwriting process, one day can make a difference in all your paperwork. So our goal is as soon as we have a closing date, nothing changes. So what we do is we make sure that our lenders stay prepared as we change policies. Tammy mentioned that they changed some policies in February. This list of people will get all of our updates. So there will never be a time where they're not tapped into exactly what you need for our program. So our preferred lender list, definitely take a look and see any of those that you would like to work with. The other addition to this is you'll see that we've got specific names. Bank of America as a whole is not a preferred lender. We look eye to eye with loan officer that will be working with our clients to make sure that they know. It's not just a document that they read and check the list. We make sure that they personally, we've talked to, we vetted them to make sure that they are prepared to help you guys. And lastly, submit your application. We don't get the pleasure of meeting you and helping you go through this process if you don't apply. We have funds. We've got plenty of funds. We have nonprofit builders that work with us for affordability. They also offer training and homeowner counseling as well. So we do our best to put the pieces of the puzzle together so that you guys don't have to. So we encourage you to apply. We'll walk you through this process and make sure that you're prepared every step of the way. Because ultimately, our goal is to make your homeownership dream a reality. So I hope that we will be an MVP for you guys as you go through this journey. If not, maybe next year. But we'll keep trying because we definitely want for you guys to, if that is your dream, we want to be a part of that. And I know we want to hold some space for Q&A, so I'll stop there so we can do whatever Q&A we need to do.
Yeah.
Yes. Just kind of. Thank you. Sure.
I just want to make sure I heard you correct. So with your program, with as far as the forgiveness each year, you have to, as the buyer, you'll have to qualify if you
So there's two different things that we're doing. The question was, do you have to basically kind of requalify every year to be able to get the deferred forgiveness? No. Once you're qualified, you're qualified. What we look for is annually we're making sure that you're still occupying that home as your primary resident. So getting your mortgage and your taxes and your insurance lets us know that you're still occupying that place as your primary resident. The second thing it does is if we see that you might be having some financial constraints and maybe you are a little bit behind, it gives us an opportunity to engage with you and do our best to offer assistance. I think we had a slide earlier that said ask for help. If you won't ask for help, we'll ask for it with you. So we want to make sure that your dream stays your dream. If there's some foreclosure things that we need to look at, if there's budget we need to look at, we use that as an opportunity to, yes, check that box, but also make sure that it's still what you wanted it to be when you got there. Does that answer your question? Yes, ma'am.
So I believe Dallas was a 5-year forgiveness. Irving is a 10-year, but you have to see this property for 10 years before it's completely forgiven. Is that what I understood?
We have layers. So depending upon how much money you receive, depends on how long that is. So if you are doing, I think up to $5,000, it's 5 years. Then it goes to 10. Then if up to $15,000, it'll be 10 years. If you're getting the full 50,000, it'll be 20. Yeah. The question was, how long is the affordability period for our assistance? So HUD requires certain minimum affordability limits or criteria where you have to stay affordable and you have to be in that property for your primary residence as a part of the federal funds.
So potentially 20 years, they have to stay in that property. Let's just say you got the full 50,000. So you have to stay in for full 20 years?
You don't have to. The lien is placed on your property. Right. Either you go through that process when you're ready to leave, that's where the deferred part of that forgivable comes into play. Does that make sense? I'm asking your question. Okay. Yes.
Want to add to that? And then
Yes, so with the city of Dallas, with the federal funds, it is layered, so it depends on how much assistance you receive. So any assistance under 15,000 is 5 years. 15,000 to 40,000 is 10 years. And then above, if you receive more than 40,000, it's 15 years. So you don't have to stay in the property that amount of time, but if you happen to sell or lease prior to meeting the assigned affordability period, because it is forgiven annually, the balance is due back. But with our other two programs, because they're general funds, it's not federal funds involved, we have just a 5-year affordability period.
So there's going to be time for more questions. We do want to wrap up a little bit and then open up for Q&A, and then we can network, because this is not the ending, this is just the beginning, right? So Tara, why don't you finish up what you were going to say?
Okay.
And then there'll be a minute again for open Q&A, and then we'll wrap up.
How do you guys feel? Like excited about homeownership and like you could actually do it?
Yes, right?
Yes. I kind of feel like I want to like move here and buy a home in the city of Irving or Dallas because I'm like, okay, good. So listen, this one? Sorry, so sorry. Okay, so a lot of good information and resources that we got today. Clifton has the links for all the stuff we talked about on the site. I wanted to remind you, go do that debt and budget counseling session because for the first 20 people that complete that and then reach out to Clifton, he's going to send you a code where you can go online and take the 8-hour homebuyer workshop for free. This is the website that you'll come to. It's firsthome.mmiuniversity.org. That's me. Look how good my hair looks if I am not a real person. But we'll walk you through the process. We'll give you what you need, and you can get that certificate of completion online. So I just wanted to thank you for your participation in attendance, sort of wrap up, let you know that the resources are coming to you. And like Clifton said, this is not the end, this is the beginning. I don't know about you, but I'm energized. Like, I'm excited, I'm energized. I really do want to come back next year and be like, okay, who's where they are in the process? Like, what is happening? Because I feel like, every time we start to talk about stuff like this, we hear that term generational wealth. And I always say this, but people are like, yeah, generational wealth. I got to buy property to pass it down. But I always feel like, yeah, but we got to start smaller. We got to start with conversations like this. We got to talk about what it takes, where we are, where we want to be, and how we're going to get there. And then those conversations grow from our kitchen and our living room to our schools and our communities. And then that's how we build generational wealth. That's how stuff changes. And I'm super excited. Okay.
Thank you for watching our Empower Series YouTube video. I really hope you enjoyed it. Remember to hit the subscribe button below, as well as the little button to be notified the next time we upload our video. Until then, stay connected with us on social media, Facebook, Twitter, Instagram, whatever your social media flavor is. Inspire the world to thrive. See you soon.